Good day. We are starting with Term 3's work, Economic Management Sciences, and we will start with lesson number 14, which is the revision. So I will go very fast on revision, which is what we have already covered in term number 2. Okay. And they say read revision to refresh your memory about what was covered in term 2 or in unit number 2. This is on page 97 of your textbook. Okay, so we have covered financial literacy, and under financial literacy we have looked at the accounting cycle. Okay, the accounting cycle is a sequence of 6 consecutive steps, which means they follow each other consecutive, they follow each other in that order. Okay, the accounting cycle is a sequence of 6 consecutive steps in the processing of accounting activities in which financial transactions are recorded from time they occur up to the end of the financial period, when a business profit or loss is calculated. Okay, so the accounting cycle is a sequence of 6 consecutive steps. So you must know that it has got 6 steps in the processing of accounting activities in which financial transactions are recorded from the time they occur up to the end of the financial period, when the business's profit or loss is calculated. The accounting cycle begins when a transaction takes place. If any transaction takes place, that is when the accounting cycle takes place. All transactions are recorded on the source documents. Example of source documents is receipts, check, and invoices, which serve as financial records. Activities takes place in the following order. This is the steps in the accounting cycle. Okay, let me put it up so that you can see all the 6 steps in the accounting cycle. The first one is the transaction. Okay, what do they mean by transaction? Any activity where money is involved. Transactions are analyzed as they occur. Examples: buying a cold drink at the shop or getting haircut at the hairdresser. Second step in the accounting cycle is the source document. The source document are necessary for the recording of transaction in the subsidiary journals by bookkeeper of a business. For example, these are the examples of the source documents: receipt, deposit slip, cash invoice, cash register slip, bank statement, etc. Second, it's journals. So we start with the transaction, we go to this source document, and we move to the journal. The information on the source documents are recorded in the subsidiary journal, usually daily. And the example of the journals that we have, it's the cash receipt journal, which we call it the CRJ, and it's the cash payment journal, which is the CPJ. And step number 4 is the general ledger. Okay, before I go to step number 4 in the general ledger, so we have covered everything up to step number 3 so far. But step number 3, remember, it's divided into the CRJ and the CPJ, right? So in term number 2, we have covered the CRJ, which is the cash receipt journal. And now in term 3, we will cover the CPJ, the cash payment journal. So we are here almost in step number 3. After the journals, we have the general ledger, okay, which will have the debit and the credits. DR stands for debit and CR stands for credit. Once all source documents have been recorded, the entries are summarized in the general ledger into accounts using the double entry booking principle. Okay, that is step number 4. Step number 5, we have the trial balance. What do we do with the trial balance? To check the arithmetically accuracy of the general ledger. Does the debit side equal to the credit side? So the trial balance we use it to check if the general ledger is correct, if the debit side is equal to the credit side. And the last step is the final account, where we calculate the business profit or loss for the accounting period and the total assets, equity, and liabilities of the business in the balance sheet. Okay, so now let us revise what we have already covered in the cash receipt journal. All the money a business receives is deposited into the bank's account daily, every day. If we receive money, we, as the business, we put it in the business bank account on a daily basis. All cash received by the business is recorded in the cash receipt journal. So every cent that we receive, we record it in the cash receipt journal, which is the CRJ. The following source document are used in the cash receipt journal. We use receipt, we use cash register slip, we use cash invoices, we use deposit slip, and we use bank statements. So if in a cash receipt journal in the table you have a document column where you have to put which source document, okay, you can decide which one it is in this 5: receipt, cash register slip, which in abbreviation we say it's CRR, and cash invoices, deposit slips, and bank statements. Okay, that is what we've covered in a cash receipt journal. We have also discussed entrepreneurship, and we have started by the definition of an entrepreneur. An entrepreneur has the ability to combine all the factors of production to manage a successful business. The 4 main factors of production include natural resources, capital, labor, and entrepreneurship. Those are factors of production, and they've listed them in the table here. We have factors of production. They describe each factor of production and what is the income from each factor of a production. And they ask this question in the exam. So they would ask you, they will give you the factors of production, and they will say give the income from each. So factor of production number 1, capital. The income from capital that we get is the interest, okay? And the second one is labor. What do we get from labor? Salaries and wages, okay? And then the third factor of production is natural resources. You can get rent, for example, from those one. And then entrepreneurship, the income would be profit, and you must know how to describe each. So capital is the financial input required to produce goods and services, and labor is the work that people do. Natural resources, for example, gold, coal, that are taken direct from nature as raw materials. So to define again, natural resources is resources that are taken directly from the nature as raw material. And entrepreneurship, it is how to define entrepreneurship. It is an entrepreneur's ability to combine all other factors of production to manage a successful business. We also looked at the markets, and we said a market can be defined as any place where buyers and sellers interact to trade in goods and services in exchange for money. A market is any place where buyers and sellers interact to trade in goods and services in exchange for money. There are essentially 2 types of markets, which one is goods and services market, and the second one is the factor market. The goods and services market is where finished goods and services are offered to consumers, which are households, in exchange for money. Okay? Goods and services market is where finished goods and services are offered to consumers in exchange for money. The factor market is where businesses purchase the factors of production required to produce finished goods and services. It is where capital, labor, natural resources, and entrepreneurship are sold to businesses by respective parties. The labor market and the financial market are two examples of a factor market. Now you have this activity 14.1 to do as the revision, and you have also done this activity in term 2. So please complete it as the revision exercise again.